All right, so let's bring over our gold chart. And the first thing we note is this big impulse move right here, right? So right away we saw that we were bullish, but this is the move that I ended up taking trades on. So we didn't see that first. We're going to rewind. And every morning I like to do my pre-market prep. As most of you know, if this isn't your first time tuning in, my pre-market prep is usually done around 8:30 to 9. And I host these on YouTube. And you guys can find it at Pre-Market Prep with Kevin Dubrisky. And those are every morning on YouTube on the Bullish Bears YouTube channel. So the first trade I took was I noticed that we took out a pretty strong area of interest, this blue zone down here. And I'm going to show you guys on the higher time frame how that zone looked. So this zone right here, if we stretch it to the left, was a strong area of resistance. And then we broke it and it started working as support. So at this point, I said, okay, I'm going to look to see how we react. Now, a great way that I personally like to trade and help teach others to trade is don't try to predict the market. Let's wait for the reaction. Once we wait for the reaction, a lot of times when the market is moving in our direction or reversing, it will give us that second leg or pullback that will give us a possible better entry. So at this point, I was looking at, and again, this is 8:30. I started looking at pre-market. So here's our 8:30 candle right here. This is the 15-minute time frame. I'm going to select bar one more time, pull this back a little more. Now at this point, I didn't see this trade set up. This trade set up again, guys, this didn't show itself until the market further developed. When we let the market develop, we could then use that to our advantage to say, okay, it's developing in my favor with the probabilities I'm going to take this trade, or it's pushing against me, or we're in a range-bound price action. I don't want to take any trades. So at this point, we held this area, this blue zone, AOI, area of interest, and I saw we started to push higher. So I would immediately mark this candle out and say, okay, here's our new level of support. If buyers do want to continue, I do want to expect price to continue higher. Then I broke it down, right? We always want to do some time frame analysis. This was my 15-minute structure telling me we're going bullish. Well, then I want to look for a 5-minute, possible 5-minute or 15-minute entry. Now, my first entry, and we'll play this out for just a moment, was we created this 5-minute fair value gap. Now, the reason I was able to take this trade, and I didn't get filled right at the zone, because I wanted to wait for the reaction. Once I saw we got a very quick reaction, and I was using the tool Bookmap, which is an order flow tool. I'll show you guys right now if we could find that spot. This is at 9:05. So we were way down here. 9:05. So here we were finding support. So when the markets were trying to move lower, a good way to use Bookmap is to analyze the volume bubbles. Now, I'll give you guys a quick little intro to Bookmap, and we're going to get rid of the footprint. Now, the main thing we want to look at is our heat map. Now, this is called the heat map. The blue and the orange, these are heat map levels. Blue levels are very light levels on the current order book. That's active limit orders. And then we have the red levels, which is the, passive orders. So if we have a heavy level to the upside, as we see here, 29.15 on gold, this is a passive seller that's much heavier than the prices around it. So that 29.15, once we were able to break it, we were able to hold it as support. And that was where that second trade came in. Now, this first trade, what I noticed was we had a strong level of resistance that we broke. Now, once we break a level of resistance, what I like to do is look for a new level of support that lines up with that same area. Once we start getting levels like this overlapping, it adds probabilities to our trade. So something else I noted was we had a 5-minute fair value gap, a bearish fair value gap. So this not only was a 5-minute bullish fair value gap entry, but it was also an inverse fair value gap entry. Now, an inverse fair value gap occurs when we close above it. And I'm going to make this red so you guys know that this is our bearish fair value gap. And then this was our bullish fair value gap. So we knew that these zones, this was resistance. Now we flipped it. Now we're holding it as support, and we created a new support level. So everything's adding up. Things are starting to overlap. The odds are in our favor. I was able to take this trade, and the only thing I did wrong with this trade was I didn't hold it long enough.